All right, so what we're going to do now, we're going to focus on the trade receivables control and the reconciliation of the trade receivables control. So you can expect those questions with a lot of marks requiring you to prepare the trade receivables control as well as reconciliation. Right, my name is Thomas and I'm with Top Crest Online. So we prepared this recording for our students, those who are in our Telegram groups and those who have come to join our private tutorials. Right. So you can get this video on YouTube and on our Telegram groups. So if you would like to join our Telegram groups, because we do post a lot of questions and discussions, you can WhatsApp this number specifically and say you want to join the free Telegram groups. Then you're going to be directed there. But you are also free to ask for private tutorials there on Telegram. We have consultants. So you can just say, I'm looking for private tutorials for this. And then we can explain to you what's involved and how do we assist you. So today we're going to focus on a question of trade receivables and their reconciliation. And this question comes from tutorial letter 102 for FSC 1502 and the 2020 edition. So this is question 7 of that. So if you want, you can get that tutorial letter. If you can't, you can follow this, it's fine. So this is the story. But before we go into the details of the story, let's just remind you of 3 things that you need to remember when dealing with trade receivables. So the first thing you need to remember is that trade receivables is an asset. Right? So it's called trade receivables or accounts receivable or debtors. All right. Some modules would refer to them as client control, for example. But basically, it's an asset, and it arises when we render a service. So we render a service or we sell goods, right? And we do sell the goods on credit. Okay. So when we sell goods on credit, then we will have trade receivables. Okay. And remember that as an asset, it increases on the debit. Right? So when we render a service, we're gonna record it in the debit side of the trade receivables control account in the general ledger. Then the third thing you need to remember is that when we receive payment, when debtors make payment, right? So the debtors are going to make payment, right? Then this is going to be credited to the trade receivables control because we're going to debit bank, we're going to credit the debtors control because the debtors have paid, they are decreasing. So when you are constructing a trade receivables control account, there are a few things that you need to keep in mind. So the trade receivables control account increases on the debit side. Something that I want you to remember all the time. And so if you think of a transaction, if you are given a transaction, right, then you need to think in terms of whether it increases what people owe us or whether it decreases what people owe us. If it increases what the people owe us, then we're going to make an entry on the debit side. If it decreases what the people owe us, then we're going to make a credit entry on the trade receivables control. So those are the important principles that are going to bind us here. We're going to be binded by whether it increases or decreases what our customers owe us. All right. Right. All right. So that's fine. That's where we are. So from there, let us now go to the story and I will explain to you. All right. So this is our list of trade receivables. I need to explain how the recording of trade receivables actually happens so that we can see how the idea of reconciling comes around, okay? Because we need to know what we are trying to reconcile. So what happens is that when we make a sale on credit, right? So this is what actually happens. Right. So, okay. So when we make a sale on credit, say we sell to Tato, right? Let's just say we sell to a customer called Tato, right? Tato's account. So what happens is that when we record this transaction, I'm going to explain to you how it actually happens in the real accounting world. So we go to Tato's account, right? And our customers, because Tato is a customer. So we go to the customers, we open Tato's account. We make an entry that says we sold to Tato for 800, right? So this is in the sales journal, right? The entry is made in the sales journal. So we just put an entry of 800 under Tato's name, right? So what happens is this is supposed, right? Automatically, it goes to trade receivables, right? When you update the sales journal, it goes automatically to trade receivables 800. Then it automatically goes to sales 800. This is what actually happens in the world, right? So in other words, there is no reconciliation because the amount that you get that you put under title is the amount that goes to debit and credit. However, in the imagination that we have for the reconciliation, we're talking of the previous times when accounting was not automated, right? So where we would basically have to write down the journals. So the journals was a large book where you physically go and write. All right. So if you physically go and write, this is what you would do. So you would go to Tato's personal account, right, and physically write. Let's say it's 890, right? That is Tato's personal account. Then, after writing Tato's personal account, you would go to the sales journal and write. Then you could make a mistake now because you're going to write 980, for example, manually writing. All right. So you will see that this amount that you put in the sales journal will go to the trade receivables control, because the sales journal is for recording transactions when you sell on credit, and you only post the totals to the trade receivables control. So what happens is that they're going to be say you sell to Tato, all right? So and the sales journal, you're going to have another entry for another customer, another entry. Then at the end of the month, the total of the sales journal, right? This column for trade receivables column, this is the account, this is the amount that you post to the trade receivables control. So you see there that there is a good chance that the total amount that you post to the trade receivables control is different from the individual amounts that you wrote individually in each customer's book. So when you see a difference, you need to be able to reconcile and say, why is it that the amount we have in the trade receivables control, the total of everything, is different from the totals of the individuals? So you have a list of individuals, you add them up, they should agree with the totals, right, which you post monthly. Because individuals you post daily, then the totals are posted monthly. But you have to physically write manually. So in writing, you can forget. For example, you can put an entry under title, all right, and forget to write the same entry under the sales journal. So which means that your list of individual data is going to be higher than the trade receivables control, because there is something that was not entered on the sales journal, whereas it was entered under Tato's name. So basically, that's the concept of the trade receivables control account and the trade receivables control account reconciliation. So we are reconciling the trade receivables control with the individual list of debtors. So this is what happened here. That's why we have a list of trade receivables in the trade receivables ledger, or this will be in the trade receivables ledger. All right, so under hoop, if we add up all the transactions we entered under hoop, this is what we have. Then under slot stationers, this is what we have. So these are our customers, our individual list. This is what we have. Field design, this is what we have. Emily suppliers, this is what we have. So total of trade receivables per the list is 13,897. But if you come now to the story, you will see that there is a good chance that some transactions are not recorded properly, either in the list of balances or in the trade receivables control. So how do we carry out a reconciliation? We carry out a reconciliation by first of all preparing a corrected. We first of all correct the trade receivables control account. That's what we correct. Then once we have a corrected trade receivables control, we can now correct the individuals, right? So that correction of individuals is done in a reconciliation. So we reconcile with a correct account, with the correct amount in the general ledger, right? I hope that does make sense. So let's see if we can do that. So the question here, the required, says we must prepare the trade receivables control account, right? So when we prepare the trade receivables control account, we need to remember that all amounts should be recorded correctly if they are sold on credit, right? Then they have to be recorded in the trade receivables control. So that means that your cash sales, if we sell on cash, we cannot record that in the trade receivables control. So let's go through each and every of these to see whether we need to, because there are two operations we need to do. The first operation is to prepare a correct trade receivables control. And the trade receivables control is going to be affected by the entries you make in the sales journal, right? Sales returns journal, as well as the cash receipts journal when the people are paying. Okay. So if there's an error in any of these journals, it will affect the trade receivables control. But if there's an error in the individual account entry, not in any of these journals, then we going to show that in the reconciliation, right? So this is our starting point. So let us go one by one. As we go one by one, our aim is to analyze the effect on the trade receivables control, whether we should update the trade receivables control or not. All right, so we have a balance, a preliminary balance before all the adjustments of 15,123. So if I want, I would say that it's going to be a balance brought down if I want, right? And this is 15,123. It's on the debit side. So this is not going to affect our reconciliation, because the only things that affect our reconciliation are those that are mistakes in the individual list. Remember that. So the individual list, the mistakes are going to be corrected in the trade receivables reconciliation. So this won't affect our reconciliation. Then we have a number 3. There is some investigation that happened. So 3.1, the total of the trade receivables column in the sales journal was undercast by 350. So remember that we have a sales journal where we make entries, entry number 1, 2, 3 of all the customers. Then at the end of the month, we take a calculator and add up everything. So we saw that when we were adding out everything in the sales journal, we probably made a mistake, and the total we got was smaller by 350. So which means this 350 has to be added, right, on the debit side, so that it increases the trade receivables. So this is going to be a debit, and it's going to be an omission, or undercast rather. It's an undercast. All right, because it's in the sales journal, it doesn't affect an individual. It's just an adding up, an error of adding up. So we can say which individual was omitted, because of all the list of debtors, all other entries have been done properly. It's just the adding up, and so we have to correct the trade receivables control. Then another error is the account of Hoop was incorrectly balanced. The amount should be this. So this is going to be in the reconciliation because it's an error affecting an individual list, right? And not the balance, not the totals that we have. Remember, we went there to his account. We tried to balance Hoop's account. That is where we made a mistake. The mistake was not made in the sales journal or the sales returns journal or the general journal or the totals that we used to post to the trade receivables control. So the total of this column in the sales journal was 6890. The amount was posted to the trade receivables control as 8960. All right. So remember that this is what we actually we've been talking about. We have to physically write, and in physically writing this figure, which is the correct one, we said we debited trade receivables with 8960, and that's too much. It's an error. So to reduce the trade receivables balance, we have to credit the extra amount. So the excess there is 8960. We subtract 6890. So we have 2070 on the credit side to reduce, because this is too much by 2070. So a credit note means that we have a customer, all right, who returned goods. Okay, so the customer returned the goods, so that's what happened. That's our credit note. So when the customer returns the goods, we need to record it in his account as well as in the sales returns journal. So you see this was entered in the sales returns journal. So our trade receivables control is constructed from the sales returns journal, sales journal, and cash receipts journal, plus a bit of the general journal. So this, our trade receivables control, is okay because this was entered. The problem is that it was not posted to the individual account of Doormat cleaners. So we need to remember that this is going to go to the reconciliation. So far we have this amount here and this amount here, because what is affected is the individuals, not the totals. Right? So the account of the debtor should be written off. All entries must still be made. So what this means is that we have, because we are writing it off, it's a credit loss, it's a bad debt, right? It's going to reduce our trade receivables control. So it's going to be an entry on the credit side for the full amount of slot stationers, right? So slot stationers 237 is going to be credit losses written off. All right. And one of the things you need to know when you deal with trade receivables is the journal entries for credit losses, writing off the allowance for credit losses, as well as the credit losses recovered. Right. Right. Brilliant. So that's where we are. So let's see. So we said this is also going to, so it's not going to be, it's also going to be a reconciling item because it's going to affect the individual's account, slot stationers. So we're going to include it. So let's see what else we have. So we have a check received from Emily Suppliers. So Emily Suppliers was paying us, and so we received the payment, the check from Emily Suppliers, 1850. And it was incorrectly analyzed as sales in the cash receipts journal. So if you go back to the structure of a cash receipts journal, you know that it has columns, right? So the column that says sales means it was a cash sales. So it's an error, right? Because what it means is this was a cash sales received. So in other words, this individual, Emily, was we understand that based on the records, Emily Suppliers haven't paid us because we said this was cash sales. It should have been put under the trade receivables column. where we record our debtors, where we record our trade receivables, paying back the money. But unfortunately, this was not recorded under the correct column. So, in other words, this guy still owes us according to the records, but he paid. So, what we need to do, because this reduces the trade receivables, it reduces what the customers owe us. It's going to be a credit entry, which was omitted. Right? So it's going to be a credit entry, and the entry here is going to be made by the general journal because it's in correction. Right. Then we have interest that was charged to Emily suppliers. So we are told that entries were made in the trade receivables ledger. The trade receivables ledger is the individual account of Emily suppliers. So we have a trade receivables ledger, and if we open the trade receivables ledger, we're going to see the individual accounts of each and every, right? So if an entry was made in the trade receivables ledger, then this Emily suppliers was correctly dealt with. But what we have here is it was not entered in the trade receivables control, so we have to enter this. It increases what customers owe us. We charge them interest, they have to pay. So what they owe us increases. It's going to be a debit entry. Then question 38.38 says a check of 250 was retained by the bank marked R&D. Then entries must still be made. All other entries were done correctly. So what this means is if a check is marked R&D, it means we could say payment was not accepted. So Field Design gave us a check of 250. We went to deposit the check to the bank. The bank didn't accept it. So when we received this check from Field Design, we debited the bank account and credited the trade receivables control to say we received a payment. But now it's that entry has to be reversed. Okay, so we have to reinstate the debt of Field Design. So we have to debit this to the trade receivables control to say no, this wasn't paid. This is still owing. Right. So let's start now by making the correct entries in the trade receivables control. So we start by the name of the entity, right? Then we say this is the general ledger. Then the name of the account is trade receivables control. This is going to be our credit side, our debit side. Remember, we are given the balance, right? So we're going to use the balance. 15,123 is our balance brought down. All right. So in your assessments, you could have an assessment where they also want you to put in dates. So you would have to follow based on the format. All right. And remember, we had cells that were undercast. Remember those cells. If you can just remind you, undercast by 350. So we're going to make an entry using the sales journal, right? We have to add that 350 there. And remember, we had interest income, and the interest income is going to be posted using the general journal. So your examiners would want you to demonstrate that you know the journals that we used to record the transactions. Then remember that we had this sales, which is a posting error, right? Where we said, if you want to be reminded, so let me just rub off everything, all right? And then I will remind you of the story that we had. So I'm going to remind you of our story here. So remember that this was entered wrongly. All right. So it's too much. It was posted as this. So we have to credit the trade receivables control to reduce the excess. So that's why we have it here as sales posting error. All right. In other words, we debited the sales account, all right, because it was also too much. So when we correct errors, we use the general journal to correct errors. Then credit losses, remember that the account of that guy was supposed to be written off. If you want to remember, that says that must be written off. So it's the account of slot stationers that has to be written off, and it's 237. So this reduces what we expect to be paid by the debtors. So it's credit losses using the general journal written off is 237. Then there's that sales, which is an analysis error, if you remember that. So we said this was considered as cash sales, whereas it's a debtor paying. Right. So we have to record that as we're using the general journal. Right. And we have to say this is the sales, right, or analysis error. Remember, we recorded this as sales because we thought it's a cash sales, but actually it's not. So we have to debit the sales. So we have to reduce that in the trade receivables control because somebody paid. Then what else do we have? Where is the other transaction? So this is interest. Uh, so I'm looking for how do we treat this transaction here? Um, Okay, so I'm sorry here. They say relevant entries must still be made in the trade receivables ledger. So it telling us that we don't have to make an entry in the trade receivables control. So if we're going to make an entry in the trade receivables control where we reverse a debtor's payment, we would reinstate the indebtedness. So we would say here bank settlement discount granted and VAT. What is that? um, VAT input. Right. That is what we would do. Why would we do that? Um, we would do that because we are reversing the original entry. Remember, when we receive money, we debit bank. Right? But now we say, no, that money was actually not received. So you have to credit the bank and reinstate the indebtedness of the debtor. But the question here says that only in the trade receivables ledger. So we won't put it in the trade receivables control. In the trade receivables ledger means in the individual account. Right. So I see here there is, did I jump something? Oh, sorry, there's a credit note. Was entered in the sales returns journal. All right, so this is for. Then I have to check this. So I have to check this and look at how much. Where am I getting this 130? Um, because I have to kind of explain that. What would that mean? Otherwise, if I don't see it, then I have to. Probably I jumped something here, which is very regrettable. Um, or maybe when I was preparing the question, so I can't see where that is coming from. Right, but I'm going to explain to you how such an entry would be made. Because look, I might have jumped some information here, or I might have made, when I was preparing the question, I might have omitted some information. So this would occur when we receive payment. Right. So when we receive payment, we would gonna say we debit bank, we credit trade receivables control. So the correct description would be bank settlement discount granted and VAT input. That is to say, if VAT is included, if there was also settlement discount granted, that is the correct description. All right. Normally, you have to drag and drop the full name. All right. So in the trade receivables control, it's bank settlement discount granted and VAT input. Don't confuse it with the trade payables control where it's bank settlement discount received and VAT output. Right. So that would come from the cash receipts journal and it's 130. Actually I think it's an omission, right? Um I think there was an omission that was done in the. All right, so I don't think that I can find that. particular. Right, so that is the let's basically we actually don't discuss answers. All right, it's unfortunate I can't find this. Maybe it's I forgot to include the relevant information. But whatever the case, remember we are interested in the principle, not the answer, because this answer of 15623, what are you going to do with it? All right, you need the principle. So then the smaller figure is the smaller side is going to provide the balancing figure. So we have balance, it's carried down into the following month as a balance brought down. So now we have created a trade receivables control account, which is correct. So this is the balance that we have in the trade receivables control account, which is our TRC. We have 15, right? No, not 15, it's 11, 336. But in the list of totals here, you see, we have 13,897. Right? So we agree. So there we have 13,897. This is the individual list. So because this is correct, now we have to work on the individual list. And we're going to start from the individual list to say the total for the individual list of balance of individual debtors. So this is our amount. Then we're going to make adjustments. So this is how we make those adjustments. So let's do the adjustments, right? So balance per the list, this is what we have. So we go through the story again, all right? Right. We said the amounts that go up. Right. So we said that the correct amount for CC is supposed to be, for whoops CC, right? So is supposed to be what? So hoop is 10,283. As you can see, this is the hoops balance, but we have to correct that. And it means it's too much because the balance should be a small amount. So we have 10283, all right, which we have. And then the additional information shows that the amount should be 9734. So I'm going to say less 9734. Then I see that there's an excess of 549, which I have to subtract. All right. So I'm going to say hope incorrect balancing. Then that is said to be subtracted. All right. Then that slot stationers is going to be written off. It reduces what these guys owe. Right. It's in brackets. Then we have that doormat. Remember that. That doormat cleaners, or rather doormat cleaners, I don't know. So we are told that it was not posted to their individual account. A credit note means they retained what they had bought. All right. So they no longer owe us this 45 rand because they retained it. So we have to put it in brackets and subtract. And remember that Emily incorrect analysis. I think I have an idea of where this comes from. So let's look at Emily again. Okay, so we are told here a check of 1850 was received in full settlement of her account. I forgot to put the account, which was the account amount here. All right. So that would give us the difference of 130, which I was talking about. But don't worry about that. It's my oversight. Right. So so we have to remove this 1850. All right. And the discount as well. Okay. So that 1850 as well as the discount will be removed. But then we have that guy, if you remember that. So we thought he had paid, but actually, so when we thought he had paid, we reduced his account by 250. But now we realize he hasn't. We have to reinstate it. So we are reinstating the 250, we are adding it. So now the balance according to the trade receivables control should agree with the balance per list. So this is an example where you will use brackets, but sometimes they don't give you brackets where you say when you subtract, you put in brackets. When you add, you do not put in brackets. Sometimes they give you a debit and credit. So this is what they would do. So I'm going to try and right. So you have a debit. Let me try to write that correctly. Right. So they can give you a debit entry and a credit entry and a total. All right. Um, or they can just give you like that debit entry. So they give you this is 13897, and this will be a credit entry because it's reducing trade receivables. This is also a credit entry. This is also a credit entry. This as well reduces what the customers owe or what we should expect to be paid. It's an adjustment that results in customers owing less. And this is an increase, so we are restating. So if you add those up, they're going to balance, right? Um, the balancing figure, rather, sorry, the balancing figure, which is the balance according to the trade receivables control, will be on the balancing figure on the smaller side, which is the credit side. So you need to be comfortable using the debit and the credit. And the principle is what increases what customers owe is recorded on the debit. What decreases what customers owe is on the credit, right? And then we're going to be very happy people. So if you want to join us, we're going to have a lot of practice questions, right? And we want you to benefit from them. We're going to give them for free in our Telegram groups, and students can discuss. There are tutors that will help them. So you can simply WhatsApp this number and choose to and say you want to join our Telegram groups, right? Then you can benefit, and or you can also look for Telegram links on our YouTube channel. There is a Telegram links on the comments section there. All right. If you don't find them on one recording, just look on another recording. You will find the Telegram links. And those who need to join private tutorials are also welcome. Remember that you can just join Telegram and say, "Look, I'm looking for top crest online tutors. Any consultant, please talk to me." Right, they will assist you. Right, we hope that this is going to assist you to better your understanding. What we're going to do is that we're going to keep posting this. All right, so you can also subscribe to our channel and keep alert to whatever we're going to be posting. All right, good luck with your preparations.